What's up, everybody? This is Lamine from investingsimplified.net. Today is Sunday, February 20th, 2022. I want to apologize to our viewers for not being able to put out videos for quite some time. I was on vacation for a little over a month, but I'm back, and hopefully when I see anything interesting or exciting in the market, I will definitely come back to my regular schedule, putting out videos out for viewers. So with that, let's jump to the charts and see what the NQ, S&P 500, and Russell 2000 are really telling us. If there is any evidence for all the perma bears out there who thinks the stock market is going for a crash. Looking at the technicals, this is the S&P 500 futures. What do we see here? Clear uptrend. Market peak beginning of January. We got this whoosh to the downside, which got people scared. Market rebounded, found resistance at 618 retracement. Now market is retesting the lows again. Normal bottoming process. So the question here is, as this zone gets tested, what do we see in our internals? For example, looking at some of the indicators that we monitor as the bottoming process is taking place. We'll keep an eye on those to see if this level is really going to hold. And in the event this low does not hold, February 24th at 42.12 on ES futures, if this low does not hold, where do we see market going? We could move down another 200 plus point to the downside. That possibility is there. But if that happens, does that mean market is going to be down 50%? No one knows and no one can predict. Our job here is to monitor levels and see how market reacts as it approaches that level. So thus far, we are optimistic. We will continue to keep an eye on 4,200 to 4,300 on S&P. If this support level holds, we will be biased. If we break this level, that's just going to be an opportunity to buy it at even a cheaper discount. Where that support level is going to be, no one knows. We'll continue to monitor to see where the potential support levels might be as market violate this February 24th low, right around 4,200 level. Look at volume. Volume on the 24th was one of the largest going back August of 2021. So that's another indication to us that February 24th low is an important low. If that low gets violated, that could be more room to the downside. Okay, let's jump to NQ and see where the key levels are for NQ. Looking at the daily time scale of NQ, this is the NASDAQ 100. As we can see here, both NASDAQ and S&P pretty much peaked right around the same time. But the drop in NASDAQ was far greater than S&P, as we can see here. And when market rebounded, the rebound was much weaker on NQ than S&P 500, as we can see on the chart. And NASDAQ is much closer to the lows on February 24th than S&P 500. And tech being the market, if NQ continues to weaken here, our base case is it's going to pull S&P down with it and other major indices. So that's one of the observations we are paying attention to. If NQ breaks 13,706, let's just call it 13,700 at February 24th low, the likelihood of S&P coming down, that probability gets stronger and stronger. So let's say NQ breaks this low, where are the levels? We could potentially start to monitor May 2021 lows, or even further down, March 2021. So this whole area here is going to be pretty important in the event February 24th low does not hold here, and we'll continue to monitor that. NQ, let's pay attention to 13,700. If that low gets violated, chances of major indices coming down with it, the probability will increase significantly. So let's jump to Russell 2000 and see where the support level is for Russell 2000. Looking at Russell 2000, Russell is doing even far worse than S&P and NASDAQ. Look at this. Russell peaked in November, basically. Pulled back to this key support level right around the 2000 level that has been in play since the end of March 2021. It was a big giant sideways trading. Market broke out. This was a false breakout, pretty much trap bulls. Market rolled over. Now we broke the key support level right around the 2000, 2100 level. Market went straight down to 1900, rebounded, back tested the breakout zone. And the breakout zone happened to act as a resistance. Thus far, it's holding. And our base case is as NQ continues to drag lower, S&P drags lower, definitely Russell will not be able to break out. Could it outperform here, which means relative outperformance, meaning that it might not come down as much as S&P and NQ. However, it will have a difficulty rallying. As we can see here, Russell is a little bit farther away from 228 low. It appeared Russell did not bottom on February 24th. Russell basically bottomed 4 days later when S&P and Nasdaq bottom. As we can see here, the low on Russell was 228 at 1892. Rebounded, found resistance at the prior breakdown level. Now we are rolling over again. The question is, how far is Russell going to go down with other major indices? Key level 1892. Let's call it 1900 level. If this zone breaks to the downside, we will continue to monitor the next key support level. So this is what we have for today. If you enjoyed the video, give us a like, subscribe, share with friends. Until then, we hope you all have a blessed weekend, and when we find anything interesting, we'll definitely post it.